Stocks taking a big hit amid political uncertainty in Italy. Here now on the floor of the New York Stock Exchange is Matthew Cheslock from Virtu Financial. So Matthew, was this all about Italy? We also had a falling 10-year yield which hit bank stocks a lot.
Yeah, it started with Italy, and because we were closed yesterday, that perpetuated all of the other news. So it was kind of a triple whammy, especially for financials. You had Italy, you had the 10-year yield, coming in, and then you had reports about trading as far as earnings go. So the financials have been one sector that we're expecting to take us to the next level. Today was the other way that drove us lower.
And I want to point out some action in the S&P 500. If we could get a shot of that chart right there, you see those red lines, but at the very end of it, stocks actually posted somewhat of a rally, not enough to bring us into positive territory, but it was that final 40 minutes of the session. What does that tell you about today?
Well, I kind of expected to see some kind of bounce at the end of the day going into tomorrow. This was an extension of a long holiday weekend, so we had some catching up to do to get back on par with what we saw in Europe. So today was a little bit overextended. I think people were a little panicky at first. The news didn't get any worse throughout the day, which was a good sign. And I think people said, you know what, we've been looking for a buying opportunity. This might be a time to just start getting our feet wet here a little bit in some of these financials and maybe even some of the oils now that, oil's been retracing pretty nicely.
Are those the two sectors you would point to as buying opportunities after this now third straight session of declines?
I don't know if they're buying opportunities yet, but they've had a nice pullback. So I think you get people that are intrigued now. They've got some money sitting on the sidelines and they said, you know what, I missed the recent run in those. Maybe I want to start getting involved to make sure I do have some exposure in case the OPEC does not do any cuts. So oil could see a bounce off of that. That's what we're seeing, a sell-off in oil because of that. So if that doesn't happen, in June 22nd, I think the meeting is, then you could see a rally in oil. So you want to start looking for opportunities, and we're certainly getting them on a day like this.
And it's certainly unsettling to see a decline in the market of over 1%, but we should point out that for the month of May, the S&P 500 is up 1.3%, which is a pretty incredible stat on a day like today.
Yeah, especially with all that's going on. But you look, a lot of this is definitely Europe-centric, right? I mean, the Russell 2000 is still one of the stalwarts, and that's where you saw support in there. So, these U.S.-specific companies, these smaller caps, they didn't suffer so bad today. This was the big cap name, and that's what you saw really get hit today.
And in terms of why the market fell today, it seems like investors were taking safe haven in the 10-year German bund. That yield now at about 0.3%. Just 2 weeks ago it was at 0.6%, so nearly half in value.
Well, you saw, even in the U.S. bonds, right? There was a flight to bonds today, and it was out of equities, it was out of certain other, other maybe some other markets, Italy, Spain. You weren't buying those things at all either. But one thing you weren't really buying today was gold, and that's usually a place where you said get some safe haven buying. We didn't see that today. It was down today. I would have expected that to have been up sharper, considering all the rumors of contagion and all the other things that are going on.
All right, well, it's quite a day. Again, the Dow down almost 400 points. Matthew Cheslock, thank you very much for joining us.
Sure, Scott.